before this, I only traded like the large cap stocks with options. I learned at the firm that there's tremendous edge here if you know where to look. 65 to like 85% of my P&L comes from like 20% of the days. I think the biggest thing is asymmetric bet sizing. Every single senior guy that I talked to had some form of asymmetry. They kept most days extremely small relative to their stock. And then the second thing is that...
Hey, what's up, everyone? Welcome back to another episode of Trading Takes, presented to you by Investors Underground. In this episode, I sit down with Yanni, a trader whose journey started at S&B Capital as an intern, and he's evolved into an independent trading success. Yanni shares how he built his playbooks, why preparation is everything, and how he turned his A-plus setups into consistent five-figure wins. His story is packed with lessons about discipline, asymmetric sizing, and adapting to ever-changing market themes. You don't want to miss this. Let's get stuck into the show. Please welcome to the show, Yanni. How you doing?
I'm doing good. Thanks for having me.
Oh no, thank you for giving up your time. It's a real privilege to meet you, and thank you so much for coming on. We've got tons we want to discuss tonight. I think just by way of kicking this off this conversation, obviously you've come out of nowhere. In terms of your social media profile, I think just give us an intro. Where have you been? What have you been doing for the past few years?
Yeah, so I was actually trading at S&B Capital between 2020. I was an intern around that time, intern for about a year, and got fully hired the summer of 2022. And then since then, I've been trading live with S&B Capital. I wasn't really active much on socials during that time. I was just purely into prop trading and building my playbooks there. But yeah, after 2024, summer 2024, I ended up trading my own money and leaving the firm. But a lot of the same principles and things that I've learned are exactly the same. And hopefully I could share some of those things.
Yeah, absolutely. And I'm sure, like, in terms of like foundations, a prop firm foundation is, it's going to be the best out there.
Yeah, especially something like S&B Capital. There was great people around me all the time, like one of the best experiences.
Yeah, I bet. Yeah, I've met quite a few. I've met some Tritium guys as well. They're all, to be honest, they're just all fantastic guys, and obviously absolutely incredible traders and just ridiculously knowledgeable. So there's tons we want to get through tonight. I'm really keen initially to get straight into a trade review. I know you made some good money, very good money recently on BMNR. It seems to be, it's probably, in terms of recently, it's probably one of, in terms of playbooks, etc. It's been one of the best opportunities, I think, out there. And you can always tell when there's a big opportunity because you get, obviously I see you trading, I see Lucas sharing his execs, you see everyone all of a sudden just absolutely gravitate to this opportunity. So yeah, let's get stuck into it.
Yeah, for sure.
Let me just share your screen. So what's the context there? Because this is, the theme behind this has been one of them. Usually I think in the themes can be fairly short-lived.
Right.
But this one just seems to have lasted months.
Right. And it's all this treasury strategy thing, like whether it's like crypto, Ethereum, Bitcoin, whatever. These small caps are just making these strategic reserves like MSTR style. And we've just seen a lot of runners. And it's been very different. It reminds me a lot of the 2021 market with COVID a little bit even. And there's just been a ton of runners, and it's been one of the hottest themes.
So just to get things kicked off then, obviously crypto has been extremely hot. What's the first process in terms of what's brought BMNR onto your radar?
Yeah, so just tracking the treasury strategy news is really big, and also just whatever kind of pops up on the day in terms of like gap percentage, volume percentage. BMNR was a very hot day one. I believe it was 6:30. I think the date was somewhere around there.
Mm-hmm.
So I mean, something like that. I always keep like a watch list of anything that kind of mentions crypto reserve in a separate like trading view watch list. And sometimes I do go over that, just scan through it as well. But this name was mentioned a lot because it also had Tom Lee sort of backing behind it. And he's been a big advocate for Ethereum and Bitcoin, appears on CNBC and such like that. And this was also a recent uplisting. So I think it was hotter than most. So it was good to keep this on watch as soon as it was mentioned.
Yeah, and I think just to the strength of the news as well, and correct me if I'm wrong, and with my understanding, it sounds like it was some sort of significant investment, and in terms of like buzzwords for PR, etc. Like we see lots of the companies try and do this, except like they actually just have zero cash, and it's obviously complete fluff. But actually, this one had some significant. Actually, had some. Well, might have had some real news and money behind it,
Right, right.
and I'm sure that's gonna help. Um,
Yeah, for sure.
and just so in terms of like, obviously this was in play for several days, and Nate's been nailing it recently. I mean, that's where he and Stan have invested on there are actually fantastic. It's just not losing these off radar. It's been quite a nice fader since that blow off day. But in terms of like, I'm just interested in terms of like how does a pre-market look for you on a day where there is a massive opportunity coming up? Because I'm just thinking about things in terms of like, I'm sure there's some excitement, there's some adrenaline, etc. But at the same time, there's got to be some balance, and there's got to be
Right,
some calmness to that as well. Because the worst thing you can do is obviously mess up such an opportunity.
right. So I think of it in two separate trades actually. There's a day one, what does that pre-market sort of look like? And then also the day that we are talking about on 6/3.
Hmm.
If you could look at my charts here,
Yeah.
we didn't have much of a pre-market that Thursday, but for the day one, and just in general with these trades, I'm always trying to think of the overall positioning in things, right? Whether people are fading it early in the morning, right? Or during the news, if that news doesn't fade right away. And then also towards like 10 o'clock, 11 o'clock, if the stock is making new highs and we're putting in higher highs and higher lows, that is really big information for me. Not only for the day one, but just for the overall structure in this trade. It was just completely front side this entire time. And then there was a lot of nuance that we could discuss on that Thursday that made that 64/75 breakout really, really good. But to answer your question, I think it all has to do with positioning, right? If I'm short, what is like the worst case scenario that I want to see, right? It's barely fading, it's making higher highs, higher lows, it's holding up past like 10 o'clock, 11 o'clock, and it's not moving in a capitulatory way. It's just a steady grind and it's following moving averages, it's above VWAP. Those are all things that, as a short seller, you need to be extremely aware of. So it's that positioning that kind of makes it very special for the long.
Yeah, and just on that, like the day two, which I guess was the Wednesday, yeah, was the Wednesday.
Mhm.
I was short, and like a fairly typical day two setup for me, but it was just extremely obvious that it was just extremely obvious that this was just grinding, building,
Right.
and wasn't going to fade. And actually, obviously there's still a steady uptrend, but it was fairly sideways actually for that day, and then it
Mhm.
was obviously holding so well then into that Thursday.
Right. I mean, exactly what you mentioned. So, like, if people are short Wednesday, Tuesday, whenever, and it's not fading, when it gets tight at the highs, like, naturally, there's just going to be people stopping out there, and there's just going to be a flip in liquidity there. And that's really important to mention, you know?
Yeah, yeah, and just in terms of obviously approaching this as an opportunity, um, you've highlighted some really strong reasons why this would constitute to be a high grade setup. So just in terms of your preparation for sizing, so obviously coming into this Thursday, are you already thinking I need to be using larger size than before? I need to be thinking my typical size would be X, so I'm going to go 3 or whatever. How, what's your process there?
Yeah, so I think it comes down to just like a sizing checklist. And this doesn't need to be like super defined, like you're sitting there hitting like the check marks off your list, right? But understanding what are the nuances for a playbook, for it to be A plus versus like B, whatever.
Mm.
And for something like this, we just had a lot of nuance with the float. We have a hot theme. The technical pattern is really good. We're also coming into an extended weekend where, the market closes at 1 o'clock on that Thursday. So just from a positioning standpoint, there's a lot going for this long.
Yeah.
So all of those nuances together, like that's just going to make me think that I want to have more size, right? I think it just comes down to playbook and understanding what are like the best case scenarios. And these could be like concepts, right? It could be like float size. Um, Time element is really important for me. And, the hot theme as well. Sometimes in a slow market, this type of trade is not really going to work, right?
Yeah.
So all of those things kind of influence my sizing. And when I'm preparing pre-market, those are all things that I'm thinking of.
Yeah, such a great point. And just for, I know people obviously will be listening on Spotify as well. We won't be able to see this, but like just looking at like the granular detail of your notes there, like there are subsections to the so there's context, there's fundamentals, looking at the float mechanics, the technical pattern, and like
Right.
the theme. There's real detail there. There's real nuances there, and I think like as a general rule, like that, and as much as like that, like you said, there isn't a tick box, but like you can start to build a picture, in my opinion, with just how many boxes you're ticking in general. And like if you're able to make, I mean, there's what 12, 13 bullet points there. I think if you're able to make so many ticks at that
Right.
point, it's like, hang on, there's a lot in my favor here.
Exactly. Yeah.
That's great. That's I mean, I just love seeing, and we've done a few episodes on the length in the depth of reviews. So I just love to see anything, absolutely anything like this in such detail. So just to touch on as well. So I just want to go back to the chart, if that's all right.
Sure.
And just coming into that Thursday, just to look at like the key levels and why are they key levels, where are they from, etc.
Yeah. So the two biggest levels for this day is the high that we put on Tuesday, which is around 75, and then the previous day high around Wednesday, right? How this looks on sort of like a daily chart or maybe like an hourly chart, you just see that it gets really tight towards the highs, and that contraction in such a hot stock with a lot of volatility just shows to me that it's going to make a big move either way, right? So once it gets above that previous day's high, we
Mhm.
kind of have straight line to that 75, and then after that, it's just smooth sailing from there, and we start to squeeze. So those are the two major levels. I think these other levels are from the short side from previous days, but I think by far those two levels are the biggest on the hourly chart.
So yeah, and with a setup like this, and I hate saying simply or anything like that, but are you simply buying the break of those levels?
Yeah, yeah. If we get volume, we see the tape sort of get really thick there on the bid, especially, and that bid starts to step up, and you see also quick rebids. So like, it's not going to be such a clean level where like it's a large cap stock like an Nvidia 500 break where it's just going to lift that and go straight away, but it's the price action after the stuff, how we're looking at the key levels, and the price, how price is respecting that. So once we get above that, we just hold into view up and reclaim, right? That tells me a lot of information. And yeah, I like to think of key levels as not really brick walls, like it's gonna go above that level and just go, but it's around that area that's important, and especially for small cap stocks, like that's super important as well.
Yeah, yeah, absolutely. And just to touch on as well, like just obviously, like we know you've treated this with special circumstances and it's a high grade setup, but in terms of like how you actually sized in, are you? I know we're going to touch on your executions in a sec, but are you looking to get in relatively tight in one shot, or is this something where you build a position?
Yeah, I think it depends on the setup. Like, there's definitely been low float squeezes where it's been a little bit tighter, and I'm gonna put more of my size in specific spots. But early on, this still kind of needs to prove itself. So I'm actually not adding a lot of size initially into this 65. I'm like slowly scaling in, making sure that it doesn't really stuff. I'm gonna move my stop a little bit tighter if it is starting to work.
Hmm.
And then once we get above that 75 and like start to hold, like you could add some real size once it's like just past all resistance, past like 10:30, 11 o'clock, that like gives you so much information. Yeah, so for this specific one, like I want to be scaling in until it proves itself.
Yeah, absolutely. No, great points. And just in terms of like, you've touched on it a lot there in terms of what you want to see on, in terms of price action, like intraday. Um, is there anything that you should add to that? I mean, it's just from that point, and to be honest, you look, it's so much easier to review in hindsight, but like, it just looks extremely clean in terms of it's just higher lows and just keeps breaking.
Yeah,
You really,
actually, yeah, for sure. And actually, one sort of thing that I do for all my playbooks really is go by bar in my reviews, and then also um in my back test, right, to see how these kind of squeeze, right. um there are certain points in the chart where it doesn't do anything wrong, but it's not like 100%, you know 100% conviction to add full size.
Mhm.
But then there's certain spots, like for example, when we get above that high or we get tight above that into like 90s, where you could start to think like, okay, this is going to be really good. But a best practice that I did at the firm, and I've seen a lot of younger guys do, is go to their past examples and go bar by bar and just say objective truths about the price action. Like, you're not trying to predict it. You're not trying to do anything really other than make observations, right? The volume looks like this. This candle did X, Y, and Z. And just trying to be as objective as possible in the context of like the trade, obviously,
Mhm.
really has helped me. And that could be applied to like any trade, really.
Yeah, and I think that's such a powerful point, I think, as well, and something that's really worth stressing, because I think it's very easy, I think, a few various lenses to see what you want to see, as opposed to, like you said, just objectively view and just objectively watch what's happening, and then actually try and make it simple in that case, because like, and we're going to touch on this as well, but like I'm looking at this thinking, otherwise, for example, it would possibly be, if you didn't have the big picture look that you had, it would be very easy to sell this extremely early, for example. Like it's a 10 point move before it's even broken out.
Right. Right.
And just to touch on that as well. So that initial risk you sort of sized in, um, and in terms of exits and plans, in terms of like how much, like I know you just touched on obviously what you said about actually I'm just going to watch the price action and make assessments as we go. Do you have any plans in terms of like at 9:30, or is it this? Are you just going to trust yourself to make decisions in the moment?
So one thing that I always sort of notice when I'm trading these, especially when I'm in it, it just always goes much further than I might expect. So, so I try to like just completely have an imagination for these
Yeah,
things. Like,
yeah,
uh, there was another one back in the day, TOP. I was involved in that breakout towards the afternoon actually, and I sold so quick. I'm like, wow, it made like a 200% move, but then like all of a sudden it's up like a
yeah,
1,000%.
yeah,
So It really just depends on the expected value, meaning like, has it done anything wrong? Is it still in the trend? Is it speeding outside of its trend and sort of getting capitulatory?
Mhm.
And obviously, you want to pay yourself on these big spikes, but I've always tried to be in the mindset that this could go a lot further than I think, especially for A plus trades. So I want to be using trails. I want to take it off when the trade is done.
Mhm. Yeah, and I think that's always what impresses me the most. I think with, and I mean, and I speak to a lot of prop guys and a lot of the top traders. It's like a lot of it stems back to that planning in terms of like that awareness, and to define this as an A grade setup means that it can have some special measures and some special treatment. And like you said, it probably has some sort of crazy outlier range. And ultimately, like you said, and like how you traded this, there's an expectation that if this goes in your favor, this is a month maker, right?
Right.
And I think that's just like such a powerful point that like so much of it comes down to the work you've done before. And actually, by the sounds of it, like the work you've done before, and like, correct me if I'm wrong, and if I put words in your mouth, then please correct me. But like, that's made those executions that much easier, and that plan that much easier to follow.
Right. And you're touching on such an important point. And something that we did at S&B Capital all the time was doing these write ups, right?
Mhm.
It wasn't enough to just sort of trade these good. When we had a good trade or somebody else made a good trade that was a month making thing, we would go in extreme detail and send these write ups to the younger guys and to the senior guys, get feedback, um, and build out this playbook for ourselves. And it's only when you do that sort of work and trade a few where you could start to size these bigger and trade these more well. It's always a process, like there was times in the past where, for example, like we touched on it before with the TOP, there were some people making six figures on this after hours move, but I'm sitting here only risking like 5% of my daily risk, only capturing 27 points. I mean, that's 100% move, but in the context of
Yeah,
the bigger trade, that's like nothing, right?
yeah,
But
yeah, absolutely. And I definitely want to go on and you go into that in a lot more detail in a second. Just to finish on BMNR,
sure.
just to, because I don't want anyone saying no, we didn't trade it. Just flash up your executions, just because I know what people should be like. That's all.
Yeah.
I mean, and you made this is a decent 5-figure trade for you as well, for
Yes.
context for anyone. And I think what I love about this as well is like you said, selling into rips, but also like repositioning yourself as well. And I think like what's impressive as well is like again that range anticipation in terms of like for example I watched that break of like 125 or one highs of 130, and it's still having that expectation that we're not near the top yet.
Yeah. Yeah, for
Like,
sure.
incredible. And like I said, like there's always like a pattern with this in terms of like when there's a big up, you just see the big traders turn up and trade this, and like typically it's all quite comparable in terms of notes, executions, but I think like the common theme amongst it is they've done the work. They've graded this highly because of that prep and that work. So, I mean, thank you for sharing. That was that was super in depth. And for those of you watching as well, like this is a really big document that you've got here.
Mhm.
This isn't just a few images or whatever.
Right.
It's
Yeah.
yeah,
The amount of notes here, like if this was printed out, like it could easily be like 10 pages. And it's not all my notes too. Like I'm adding like my pod members' notes, things I see on Twitter. These are all reps in my mind to get better. And
yeah.
there's no shame in like, you know, putting up those executions and studying from that. Like we're just here to get better, right? And it's just doing these reps that uh, make it very repeatable in the future.
Yeah, and I love that you got a few comments from other traders, and I traders in your pod and traders probably from Twitter as well. And I think
Mhm.
that's such a that's a real positive of X or Twitter, however or people want to call it these days. Like there's tons of opportunity to grow, and someone, yes, as much as it can feel a bit shit when someone has grossly outperformed you, actually there's a lesson there. There's something to learn, and clearly you're doing that. So thank you for sharing that. There's tons of other things I want to discuss. Really want to get into that prop firm mindset, and I know we've just covered like several of those topics. I think the first question, the most glaring question, is what do you think the prop firm? What do you think the trader at the prop firm taught you that most retail or independent traders miss?
So I think the biggest thing is asymmetric bet sizing. I mean, we talked a little bit about like A plus trades. In the past, when I was a retail trader before the firm, I would bet on all my trades the same. And like you could be consistent that way. But every single senior guy that I talked to had some form of asymmetry. They kept most days extremely small relative to their stop, and they would scale very big on uh, the playbooks that they've done work on and they think is A plus, and they would put up big numbers for that. And then the second thing is that there is no like real big identity. Like, sure, some people could prefer small caps or large caps, whatever. But I think in the whole retail space, it's very easy to define yourself as like one trader. I trade the Mag 7, I trade this. There is a lot of edge out there. You need to talk to a lot of traders that are making money, especially, and you could learn a lot from those people. And that whole identity thing, like that's something that I struggled with actually early on at SMB. And just seeing those other senior people trade what's in play, expand, like just seeing all these different things, like kind of opens you up to do that, right? Mm-hmm. Before this, I only traded like the large cap stocks with options as a retail trader. I didn't know anything about small caps, and I learned at the firm that there's tremendous edge here if you know where to look. So I encourage everybody to sort of do the same.
Yeah, and again, like as an adjunct to that as well, like there's so many examples where like and just to like mention David Hanlon, laptop legend, like probably one of my favorite traders on Twitter. Like he's just like a great example of where there's a big op on the day, he'll be there. Valkyrie's another one. I know, wait, like again, like he's another great example of if there's an A+ breakout, he's there. Like it's not like he misses them. And like again, it's like that rotation of just where those A+ opportunities are. And just as a follow-up question to that, obviously you've had such a fantastic year. If you had a consistent bet sizing, I mean, what would the extreme be? Like, do you think it goes as far as to say you would be? I'd imagine you'd be profitable, but I just imagined it would be nowhere near the level in terms of where you're at now.
That's such a good question. I could look at my stats. I wish I had that prepared, but I want to say it's somewhere between like 65 to like 85% of my P&L comes from like 20% of the days.
Right. Okay. Yeah.
And I saw that at SMB Capital too. It's like extremely asymmetric, and it's something they taught, that most of the P&L was just from a few special days. And that's not to say like other days they're not making money. It's just slow grind up. But if something wrong happens that day, they're not losing all this money, right? It's just cushion. Yeah. So I gotta say it's somewhere between the 65 to 80% mark.
Yeah, which is incredible, and probably would imply that if one is unable to define A+ setups or high grade setups, and everything is treated the same, then you're likely to have issues, and that's likely to be it's going to be a massive barrier to any sort of development. I don't know. It's difficult, obviously, to quantify, but it seems like that would be relatively fair to say.
Right.
And just to add, so just to build on that picture, obviously SMB, I mean, in terms of discipline, your routine, expectations with trading in general? Like how did it shape all those?
Yeah. So something actually really interesting is how dynamic some traders were at SMB. And I don't mean in routine, but like just with trading. Um, a lot of people would just have like static stops, like in the retail space. I mean, at SMB, like there was actually a few traders that don't even trade with stops sometimes, or they have general like risk management. So I thought that was interesting. And in terms of routine for myself now, um, a lot of it comes from like the pre-market prep. I don't spend a lot of time after hours in terms of preparation. It's more review after hours, but definitely in the morning, I'm spending an hour, 30 minutes building a watch list, going over screeners, all of the above. At S&B Capital is pretty much the same thing, but I would wake up a little bit earlier to commute. I'm actually in New York City, and it's like, I don't know, 15, 20-minute train ride from where I'm at.
Very nice.
So so that was a little bit different, but
And just
yeah,
building,
that's
sorry, and then just building on perhaps expectations of trading, and like obviously you were surrounded by some ridiculous traders, huge size, extremely successful, like you know, a good day is a seven-figure day, etc. Maybe maybe possibly bigger. Um, that must have because that's tough, right? Because on one hand, your expectations are sky high, and they must drive you relentlessly. I mean, were there any saying that? I don't think there would be any negatives by with hanging around with such top traders.
yeah. And actually there might be a little bit like you definitely get inspired to put up these big numbers and to scale your account. You want to be the next young guy that's the next seven-figure trader or whatever, right?
Mm-hmm.
Success story. But I mean, there's a lot of churn at S&B or any prop firm for that matter. And it's a hard job. Like these people didn't put up numbers like that just trading 1 or 2 years out of college and at a firm, right? It's like years of struggle. It's hard, right? So all that is really inspiring, but it is easy to compare yourself to others, and that could be a negative. Like you kind of have very high expectations for yourself, and you maybe force things because of that.
Yeah.
I'm definitely, uh, I've definitely seen that. I've seen that in myself a lot of the time. So there's positives and negatives, I think.
Yeah, and I think like some of that goes because it's like and I'll have conversations with people, my part, friends of mine, they'll be like, "You need to size up," or whatever, or "This is what I made today," whatever we're comparing, and equally, it's like that needs to be channeled really in the right way, because if you just turn up the next day and you're just like, okay, I'm just going to add a couple of zeros on the end, then actually, like you said, like all of a sudden you're doing that with a secret setup, you're doing it like you're just doing it completely wrong, right?
Yeah,
Well, I think there's just such balance to it as well, because as much as we do really want to push on, equally it has to be done in a really structured way. And I think particularly like we're probably mostly watched by independent traders who are typically trading their own money, and like they don't, some won't get, there won't be a secondary option, they won't get to reload their account, they won't be able to. So I mean it's got to be such balance to that for sure.
yeah. I actually have like a really funny story about that, and it actually has to do with sort of like sizing up your best trades and stuff like that. I mean, we talked about asymmetric bet sizing and all this stuff, right? You need to make sure you have a playbook for this and not just start swinging size the next day, like you said. When I was very young and still new at SMB, there was this one trader that was talking about bouncing like these delisting stocks. For example, I think it was SIVB during the banking collapse.
Right, yeah.
That was going to open up very cheap. And he was talking about buying it with size, right? Oh, you could only risk like pennies on it. It could bounce like two, 300%. And I didn't know any better. I was up at like 3, 4 a.m. In the office getting ready to buy it. relative to my stop, right? And I was hearing like you have to size up on your biggest trades, this and that, right? I didn't know what that meant at the time. And I just bought like 80-90% of my stop, this SIVBQ, when it opened on OTC, and just went straight down for the entire day.
Yeah.
So there's definitely a lot of nuance to it.
Yeah.
Not...
And there's also like the nuance as well to like there has to be like a real solid understanding of that A+ setup yourself, I think, and like obviously like particularly like OTC trading so differently as well, like it helps. And like I think like as well, like just that's the other thing as well, like to point back, like as much as it's like it is a great headline, you traded BMNR extremely well, but like that wasn't like you woke up and just traded. That's a product of trading similar setup for years.
Yes, and reviewing them. You're reviewing them. You're trading them yourself. You're trading them small. You're getting better with each rep. Like it's just after like all these reps, you could put something like this. You know, I've definitely messed up a lot of these in the past. Like, I try to get better with these every time. You know.
Yeah, and I think like the only like, and I like always reflect on this as well. So like I didn't trade it that day, and like obviously like I come away from it, and I'm like, you know, it's frustrating, but like I just the only thing I think you can do is like put in the work with it, and like that the only way you obviously you do lose by not trading it because it's absolutely stupid, but at the same time the biggest loss is I think if you do nothing after, which I still think is like a big issue with like and I think like probably that's one of the things from the outset looking in, and like, you know, my experience with chatting to those that, you know, prop traders and guys like yourself is just the work that those like prop traders are doing outside of trading is quite easy. And I always refer to my like sporting background, like playing rugby, like in, you know, any football, whatever. It's easy to turn up and play for 80 minutes in that game. It's actually about what you're doing outside of it. And I think it's quite easy to turn up for 8 o'clock in the morning, look at your gap, whatever it is, actually like put in that work if you're going to make meaningful strides. I don't, and you know, I know lots, I know all the good guys do it, but that's, you know, that's probably the best way of me saying it.
Yeah, for sure.
So, well, we covered quite a lot. I was going to, because the next topic that I really want to talk about was exponential bet sizing and or as you described it, asymmetric bet sizing. I think we probably covered that pretty fully. You've really stressed how important it is, and I think, like we've touched on, it comes back to that foundation. Is there anything to add? I suppose just to get the quick, like just to temper it a little bit for anyone watching this who suddenly wakes up, watches this and goes, I'm going to suddenly trade 10x my size. Just to touch on, like, is it for everyone? And like, again, just to reiterate some of those basic principles that need to be in place before doing that.
Yeah. One thing that's also really important that I guess we didn't mention was, you know, sort of the importance of separating this for each playbook. And that's actually something that a few of the senior traders I've seen do. And they actually have like note cards for each setup, right? For example, my low float business, like catching these daily breaks, are going to be sized differently than something like an exhaustion gap or a daily breakout, something like that. It all depends on like your confidence level, how much work and how thick your playbook is for that, essentially. So that's also really important. My advice for somebody trying to do this is to obviously start small, but think in certain multiples. Like for me, it's about 4x. So the difference between a C trade, a B trade, and an A trade is generally 4 times bigger. So like a C trade, something that I don't really like, it's an average day, that may be 1% of my daily risk, right? A B trade might be like 5%, 4%, something like that. A trade maybe 20%, and then like A plus could be 80%, something like that. And I would encourage somebody to look at specific playbooks and think of them like businesses, not necessarily like, okay, my daily risk is $1,000. I need to be 80% of my daily stop on this setup, 20% in the same thing. If that's a B, like it shouldn't be based on like your daily risk, although that is very important, obviously having a daily risk limit, but it depends on the playbook too. It's not just, you know, betting bigger based on your daily stop.
Yeah, and just touching on your daily stop in terms of like, and just to make it easier for the maths, like if your daily stop is $1,000, say, how, what does that mean in terms of like, if you have an A plus, can you then deploy all that risk at once? And then if you do that and you're wrong, are you then locked out? Can you get a reload? Like how would that work?
Yeah, that's actually such a good question because it actually depends on the playbook, right? Something like this, I want to have multiple bullets for. And if I do it all at once, the chances I could get stopped out or do something wrong is very high. For something like a daily breakout, where it's more of a cleaner level, that may be like one or two scale ins, I might be a little bit bigger on that. For an exhaustion gap, maybe the same thing if I see something clear. I think if you just get as specific as possible with your playbook and the concepts behind that, what increases the probabilities of your playbook and what decreases it, you're going to be in a good spot, and you're going to get a better idea for that.
Yeah, that's incredible advice. And just to touch on as well, like it's something like is grossly work. Say like back to the $1,000. If something is grossly working in your favor, and there's a good chance you think if this works, this should work now, and if I get stopped out, I will not re-enter because I haven't playbooked that. Is that when you can suddenly go, right, I'm deploying all my risk, this is the only bullet I want? Or is that not really a position you'd ever really want to put yourself into?
I guess it really depends. I'm not sure if I'm being honest. Like, I think one way to add risk without actually adding a bunch of capital is also moving your stops tighter.
Yeah.
You could think of it that way too. So, for example, on this break at 65, if I'm versing low a day, I'm adding, maybe I want to verse like VWAP or something tighter, whatever that might be. But I don't think I ever just fully deployed my capital at one spot and said, this is it, like I'm getting in here. That's something that I used to do in the past. And I don't know, everybody that I was trading with at SMB would do some form of scaling.
Yeah.
And let's say you do get one spot and there is really no reentry. Well, guess what? That is like so much information to where your targets might look like. So, for example, if I'm taking a NVIDIA 500 break and it just never looks back, there's no reentry points. That is information that might be telling me that it's going to go a lot further and I'm going to increase targets. So maybe I don't really need to add more shares. I could just add more risk by moving my stop tighter and having my targets wider.
Yeah, that's such a great point, and that is incredibly wise as well. And my next question was going to be: have you ever gone too big too soon? Does it ever backfire? we take that one off, going all in. Yeah, an OTC. So I just want to wrap this up with a bit of a quick fire, just hopefully some bit of fun questions. What would your be like? And I guess well, the first thing that comes to your head on this one, what's your advice to someone trying to go from consistent to exponential?
So I think if you get just so specific on your playbook and then the preparation for that playbook, it's going to be hard not to scale. You're just going to feel a lot better about losses. You're going to be much more prepared for when those big opportunities come up. And it was like your rugby analogy sort of earlier. I think of like soccer or football, right? Uh, in American football, like Tom Brady's watching all this tape back. You only have a certain amount of time on the field. For soccer players, I think they only touch the ball like 90 seconds within a 90-minute game. you don't have a lot of time to really execute during the day. I mean, you might think, okay, we have like this big trading day, but there's only like a few spots where you're really putting on risk and like actually managing it, right? All that work comes from like the outside, right? So the way that I think of it is if you could be so prepared and like fluid with that, I think you just put yourself in such a good opportunity to scale up.
Yeah, absolutely. And I'm always reminded with like, like when people talk about Kobe Bryant or Michael Jordan, first one's in the gym, last one out. I think it's just always funny. And I've always said this, like how like the supposedly the most talented always leave clues what actually contributes to their success. And whilst talent is obviously a massive factor, actually a lot of the time they also outwork everyone as well. And it's just it's just a funny coincidence, isn't it? Favorite trading book or resource?
Oh, so it has to be like Market Wizards, I think. The white cover. It has to be that. Like that is such a good book. Anytime I'm like drawing down, I just always go back to that. That book just shows that there's so many different traders. Like somebody could be like trading overall market, like tech stuff, like corn futures, like
Yeah,
everything
yeah,
just kind of gets summarized that they knew their process very well and they managed risk good. Like, and that's all it is. If you could just sum it up into like one sentence, right?
yeah.
So I
I
think it's
mean,
really cool to
it's
always read that book.
yeah, it's just such a great read or listen as well. One belief that you hold that you think most traders would disagree with.
I
Does it
think it,
Toughy?
yeah. Well, I think I already mentioned it before, just with identity, right? Like a lot of retail
Yeah,
traders, they might say like, "Oh, I'm small cap trader. I'm this." I think you need to be where the money is and be very dynamic and study from people that are doing well. Don't have an identity because it's going to just be so much easier to expand. And you're going to learn a lot about your own setups too.
yeah. No, absolutely. And I think Lance says it best when he describes it as a broken slot machine. Like
Yeah.
I just think yeah, like in Stan at IU, he's talked about how like identity can like if you're like, oh, I don't trade large caps, but then the biggest trades typically, like I will predominantly trade small caps, for example, but like all my biggest trades, all of them are large caps because it's like Circle or the SRTL or
Yeah.
India or whatever it is, right? It's still like they are the biggest ops. And I'm like, well, of course I'm going to gravitate to them when the
Right.
opportunity presents itself. And just last question, where can people find you? Obviously, I think you're on all the platforms, but yeah.
Yeah. So any platform you could think of, it's just at Yanni Trades. That should be everything from X to YouTube, Instagram, whatever.
Fantastic. Well, I mean, this has been enlightening. You are wise beyond your years for sure, and I think like there's just so many. Like again, like what everything you've spoken about today, like you're just leaving clues to your success, and I think it's up to people to go and put the work in. I just want to thank you so much for your time. I really appreciate it. I've really enjoyed this conversation. So, thank you so much.
Yeah. Thank you so much. Really kind, and thank you for having me again.
Oh, we'll run it back sometime. Thank you everyone for watching. We'll be back soon. See you soon. Peace, everyone. Thanks, everyone.
Yeah.
Thank you for tuning in to this latest episode of Trading Takes. Don't forget to hit the like and the subscribe button. And if you enjoyed this conversation, please check out some of others with some great traders. Thank you for watching.